Welcome to the London Property Podcast, your go-to source for navigating the complex and ever-changing London real estate market. Our digital marketplace provides informative and educational content from industry leaders through podcasts and videos. We cover various aspects of the real estate experience, including buying and selling, finance, law, tax, construction, design, and more. Join us as we delve into the latest trends and developments in the market and gain valuable insights from our panel of experts.
Hello and welcome to London Property. I'm your host Farnaz Fazaipour, and today we're discussing capital markets and its growth here in the UK. We're delighted to welcome to the show David Woodward. Welcome.
Thank you.
Who has extensive experience in this sector, both in the UK and globally. I'm going to actually pass it on to David to tell us about how he started in this sector and a little bit about what he does.
Great. Thank you for having me.
Pleasure.
Been looking forward to this. So I'm originally from the US, moved to London about 9 years ago now. But in the US, I had worked in what we call multifamily, which is called BTR here in the UK and across Europe. But in the US, they call it multifamily. So I've worked in multifamily pretty much my entire career, mostly in the US with large corporate firms. So early in my career, I worked with one of the leading apartment REITs in the sector that was about 80,000 units. So everything in the US is kind of at scale because the sector's
we love it.
The sector's been around for a long, long time in the US, as have I. So everything's kind of big scale, tens of thousands of units is very common. So I worked for an apartment REIT in the early days. Then I ran as the CEO a private apartment company that was about 40,000 units. And that business mostly did value add investment in multifamily. And so that's buying older stock and repositioning it and renovating it, which is a whole sector that really hasn't come yet to the UK too much because there isn't as much aged BTR stock at least. And then I joined the large private equity firm Fortress. And in the GFC, post-GFC period, I set up a platform called Compass Rock in the US. And it was an affiliate of Fortress, and basically to handle the loan foreclosures that Fortress was processing post-GFC. And that business got up to about between 35 and 40,000 units as well. And all of these were national, US national platforms. But of interest in the Compass Rock platform in the US, we oversaw the management and turnaround of an iconic property in New York City called Stuyvesant Town. And Stuyvesant Town in U.S. real estate circles is a very well-known asset. It's been around since the 1940s. It's the largest multifamily property in the U.S., so it's 11,000 units of rental housing.
Wow.
It's an amazing
You
property.
weren't kidding when you said scale.
Oh, it's huge. And it's in New York City. In New York City, it's on Manhattan Island. It's on the Lower East Side of Manhattan. And believe it or not, all of you have seen Stuyvesant Town because many, many movies that pan up the island of Manhattan from the Brooklyn side, and they show the Brooklyn Bridge. Stuyvesant Town is on the Manhattan side, just kind of north of the Brooklyn Bridge. So it's 80 acres of brown 20-story, not very exciting looking rental apartments. Anyway, we handled the turnaround, repositioning, and eventually the sale of that property to Blackstone. So most of my original Compass Rock U.S. colleagues work at Blackstone today. That transaction was over $5 billion US, so it was a very big transaction. When that happened, I actually got recruited to join Brookfield, and I became Brookfield's global head of multifamily based in New York. But Brookfield owns, amongst other things, Canary Wharf Group here in London. So about 10, 12 years ago, I was coming back and forth between New York and London and just starting to see the early stages of multifamily. BTR wasn't called BTR then, it was called PRS. Starting to take hold here in the UK, but also in other markets internationally, this move towards now what we call the living sector. So that ultimately led to me leaving Brookfield, setting up my own business, and moving here to the UK with my family 9 years ago.
Well, that's really quite incredible, and I'm really glad that you're here with us today because, you know, I think the living sector in the UK, I mean, correct me if I'm wrong, but it's about 7 years old.
Maybe 7, a little longer. I mean, it was about 10 years ago that I was with Brookfield coming back and forth, and it was just being talked about at that point.
Yeah.
I think some of the early movers, obviously Lone Star up at Wembley Park with Quintain, they were kind of on the move at that point. We at Brookfield were starting to imagine what might become rental housing at Canary Wharf, which is now Virtus. They have their own brand called Virtus. Get Living, I think, had started. Essential Living.
Yeah.
Everyone seemed to pick a name
Fizzy
with living. Everything had to be living.
Yeah.
So Essential Living, Fizzy Living. And those were some of the early movers.
Yeah.
And then not much happened for a few years, and then others kind of started coming on the scene.
And would you say it's US led?
When I was first coming over here from the U.S. and then when I first moved, the U.S. was definitely the reference point. And frankly, that's why, it was of interest to me to set up a business and to move here. And so back then it was always kind of, how do they do it in the States? What works? What doesn't work? There's still a bit of that today, say 10 years later, but much less so. I mean, clearly there's the beginnings of an established living sector market in the UK. But because, and I'll explain a little bit about our businesses as well, we have an advisory business that does work internationally. And it's interesting when we go to other markets, they ask, how is it done in the US and how is it done in the UK? So now the UK has become a reference point.
All right, good.
That's right.
Good. Because actually, I've been in the real estate business for many decades, won't give my age away. But I always look to the States because to me, it feels like everything happens there at least 5 years earlier.
Yeah, I mean, it's certainly multifamily became well established kind of in the span of my career and is relatively new here. Student housing. I mean, if you look at the U.S. as maybe an early indicator of where UK markets might go, perhaps. Yeah. Senior housing in the U.S. So rental senior housing is a very well established business in the U.S. Doesn't really exist here too much. There's a few companies that are starting to explore that.
£16,000 a month. Yes, it does.
That's right. You can find an apartment, but senior, rental for senior. Yeah. I'd say if you're trying to look in your crystal ball to see what the future might hold for the UK living sector, that I think that will be a real sector. Co-living obviously is coming on stronger and stronger, and the investment returns oftentimes are better than BTR. In fact. Which is interesting because co-living is less common in the U.S. So here's an example where co-living might be able to be exported back to the U.S. in kind of a round trip. But the other sector I was going to mention is single-family rental. And there again, over the last now, say, 15 years, has become a real sector, an institutional sector in the U.S. And the company that gets referenced the most often is called Invitation Homes, which was a Blackstone vehicle. Ultimately, it was basically the roll-up of a bunch of smaller single-family rental businesses. And today in the U.S., there are a handful of publicly traded single-family rental companies that have anywhere from 75 to 100,000 individual homes that they rent out and they operate. That single-family sector is very much coming here to the UK. And in the last year or two, there have been several companies that have raised capital, pretty serious capital, for single family. I can tell you just in the last 2 weeks, I've probably been in 3 or 4 meetings specifically around single family rental. So it's coming. I'd say what's coming is single family rental for sure. Senior rental probably a little further down the track, and more co-living.
Interestingly enough, actually, with the co-living that you're mentioning, for us, it feels like it's replacing the traditional landlord, because so many of the landlords are leaving because of the taxation. I think something like 40% of the landlords have exited the market. And I recently came across a co-living that was actually for single parents, which I thought was really interesting. Yeah. So you take the co-living, but you then add like a theme to it. Yeah. Because a lot of these developments are kind of lifestyle driven. Yes. Which is much easier to provide that lifestyle when you're doing it on scale and it's all in one building. Yeah, that's interesting. I've seen a few examples in the U.S. where there's a bit of a theme behind the resident profile. Yeah. It's not that common, honestly, but shared interests and what have you, and I think it's really an interesting angle from an operations standpoint to do that. Exactly. Because first from an operation, but also mental well-being is an important topic for everybody these days. Yeah. And I think thankfully because people don't have to kind of worry on their own. They can share being a single parent and having, all those things addressed. So if you can do that and have a place to live and have your kids somewhere to play, it all starts to kind of come together, doesn't it?
And I'm just brainstorming here a bit, but you can imagine a place where you don't feel like an outsider, where you feel like you're meant to be there, you're included. And I think if you were a single parent or an empty nester or something like that, and you were living in a building with a lot of 20 and 30-year-olds, you might not feel as at home. And so if
quite disturbed,
so a theme like that might work well.
Exactly. Which is the senior living is what's happening.
Yeah.
And actually from a planning perspective, because I think that one of the problems we have here in the UK is that planning can be so time consuming and costly.
Yeah.
But from a planning perspective, in order to turn things into residential, one of the avenues has been senior living.
Right.
And I'm horrified to know that you have to be 55 to be a senior, but that's the planning rules, right? It's like 55 plus is considered senior.
Yeah.
So would you say that you're getting investment mainly from institutions at this point, or are you seeing family offices, individuals? Yeah. How is it accessible for investors?
Yeah, so I think there's been a bit of a journey on the investor side as well. Interestingly, let's go back, 10 years ago or so, it was mostly international capital, whether it's sovereign wealth or pension funds from North America or other parts of the world, that were the early investors in the likes of, again, Wembley Park with Quintain and Lone Star and Get Living and the rest, and fewer UK pension funds and insurance companies and institutional investors. That has changed. The UK-based businesses or companies are now looking at the sector and going into the sector. And then family offices are more interested and coming around. And so because we take a lot of meetings with potential investors, so we get to see kind of a direction of travel of who's coming and who's interested. I think one of the things that we're seeing, because we have only institutional investors and kind of large private equity firms and pension funds, is that the private equity groups played a really meaningful role in the early stages because this was kind of a new sector and they were getting their higher returns that they need. I think if you look at the U.S., I imagine what will happen as the sector becomes more and more established, private equity is going to have a hard time getting the returns that they need. Now, perhaps if they go up the risk curve and do more development or more strategic land or something like that, perhaps they can get there. But I think as we have more completed stock and operational stock, it will be the likes of insurance companies, pension funds, family offices, which is good for the sector because those groups are generally long-term owners.
Looking for the returns, looking for the income.
Looking for nice, steady, long-term income, maybe even 10-year plus time horizon, which is great. And that's exactly what's happened in the U.S. I imagine that'll happen here as well.
And the single family rise, do you think that that's linked to the cost of borrowing?
Yeah, I think it's a number of things. So the origins of single family rental in the U.S., to me, it's interesting, but I'm a property nerd, so I like these kind of things. Yeah. So I was kind of there when it happened. So the way it came about in the U.S., there was no professional institutional single family rental sector in the U.S. before the GFC. And so when the GFC hit and these regional banks mostly that were lending in the Sun Belt in the U.S. So the Sun Belt, sometimes they call it the smile of the U.S. So it's places like Phoenix and Dallas and Atlanta and Tampa and those kind of markets. They had just a huge amount of foreclosures. And what happened is a number of investment firms, including some of the big private equity groups, came in and bought portfolios of houses, 50 houses at a time, 100 houses at a time. But what's interesting to me is they were buying these portfolios, and let's say in Phoenix, Arizona. Now, they might have bought 50 homes, but they might have been in different neighborhoods. They're different vintages. They have different roofs and different appliances and who knows what, different conditions. But they were buying them, for however many pennies on the dollar, so it was okay. And many of us who were in the multifamily sector in the U.S. at the time thought, oh, well, this is just a typical private equity play where they're going to buy it 40 cents on the dollar and they're going to sell it 60 cents on the dollar and they're going to make a bunch of money and move on. That's not what happened. What happened is they created a real institutional market for this. And they found a gap in the market, which was people who want to rent nice houses but don't want to own, and they want professional management, because the alternative was, private owners and kind of mom and pop type arrangements. And they slogged through it and figured out a way to, service these apartments or these houses and roll maintenance trucks and fix things and, very hard work. But they've made it work. And you think about now the version that's coming to the UK is these investment groups that are going to buy from the house builders. And they're going to go buy from a house builder, and they're going to buy 50 houses on one development. They were all built at the same time. They have the exact same spec, way easier. So I think the UK is doing, US did it the hard way. I think the UK is going to be doing the easy way. And one of the things we do on our consultancy is we take clients to the US actually, and we tour them through both BTR, but also through single family. And we have relationships with all the big single family companies. So we're able to, within reason, get kind of behind the scenes and help educate would-be investors here on what they've learned over the last 15 years in the US.
Interesting. Because one of the things that actually from a big build-to-rent investor here in the UK that we've actually also had on the show, I learnt was one of the other attractive things about single family is that you don't have to wait for the whole building to finish to start making money from it.
Yeah.
So the lenders, the finance like it because you can start finishing them and renting them, as they finish, rather than wait for the whole building to finish, the lifts to go in and have your 800 units and then start. Yeah. So that's another attractive element here.
So if you tell anyone I said this, I'll deny it. Although I guess I can't deny it. So, but as an old multifamily BTR guy, I have come to really appreciate single family rental as a sector. And you mentioned some of the things. So first of all, you can take delivery a little bit at a time, which is great. You can't do that with multifamily. You got to wait for it to be done. Single family, you could take 10 units a month and rent up 10 units a month as you're taking that delivery. Yeah. Equally, when you have a completed investment, you might choose to sell off not the whole thing, but just a portion of, or maybe you're just going to sell off the 4-bedroom houses where the rent per square foot is not quite as good, and you're going to kind of optimize your investment by pruning your particular investment. Can't do that with multifamily.
That's a very good point.
You also don't have high rise and cladding and lifts and 2 lift cores and all these other issues that we deal with on the multifamily side. You don't deal with that.
No. Neighbors complaining.
Now you still have operational issues, of course, but mostly when you service your tenants, you're doing that remotely or through using technology. You don't have an on-site staff per se. You might if you had a big concentration, but generally not. So I hate to admit it, but I think single family is really interesting.
That's all fantastic, and we can see it. And I don't know whether you have a crystal ball answer to this one, but we really need a solution in London. Because when you start going out of the prime areas, do you see? I mean, I always say, can somebody just give me lots of money and let me buy clusters of 220 units all in one mile radius and sell it to an institution? But nobody's listened to me so far. But has anybody actually asked you to do that?
Well, the one of the things that I've learned living here not quite 10 years now is just the planning process and what a challenge that is. And the thing that, for me personally, I always come back to, because this is my business and it's my passion. But I always think we're doing something good for society as well. We need to add housing. People need quality housing, and we need it of all tenures and all stripes. So I think just as an industry, and certainly the planners and the local planning authorities and whatnot, they spend. I know they need to spend proper time to make sure the right things are being built in the right places and whatnot. But we need more student housing, and we need more co-living, and we need more BTR, and we need more senior housing. So not to say that almost anything works, but we just need to. We have a supply problem. I want to really distill that down to what's the issue in the UK? We have a supply problem. There's plenty of capital out there, at the right return level. There's plenty of developers. There is land available. There's regeneration sites available. We have a supply problem, and it's mostly linked to planning, unfortunately.
from your mouth to their ears. In a recent news article that we covered, it said that they were going to add one planning officer to every council. It's like, really?
Yeah.
but more importantly, I think more importantly is repurposing some of these commercial buildings.
Yes.
With permitted development.
Yes.
Into residential. And even then, we were working on a project not too far away from here, and they refused it on the basis of one studio's lighting in, 157 units. It's like,
right.
Really?
Yeah.
Now, would we delay that by a year?
Well, this is kind of the point I was trying to make, and hopefully I'm not going to get in trouble with your audience, or some of your audience. But when I'm going around the UK and I take a train somewhere and I come into a train station, and I'm not talking about like major markets, just secondary markets, tertiary markets. And I as a real estate investor, as a real estate developer, I just kind of see like, oh, this town, here we are at the train station. There's no reason why we couldn't have a little more density surrounding the train station, a little more height, not towers, but just a bit more. And probably any one of these towns could add thousands of units in a very, well thought out way, but someone's got to, have the, initiative to push all that through. But there's such a need for it, and there's obviously demand for it. So it's a bit frustrating that it's going so slowly.
Yeah. Well, they're apparently going to build 1.5 million homes.
We'll see.
Where are you seeing this growth happening in Europe?
Yeah. So on the central London bit first, I'll just comment. We worked with a client recently that's a big international institutional investor, very, very large. And they said, well, we want to get into rental housing in London. I said, fine, we can help you with that. So we kind of have a buy-side advisory service that we offer. And we said, okay, fine. And they said, well, and we want to be in newer construction. Okay, fine. And we want to be in zone 1. How many opportunities are there like that? Very, very few. And we did eventually find them something. But we're talking about, count them on one hand as to those types of opportunities. But this is a thing, too, when we talk about the the inflow of capital coming into the UK in general. Oftentimes, whether it's which is great,
yeah.
But oftentimes if it's an institution, a pension fund, insurance company, what have you, family office, sovereign wealth, London is such a strong reference point globally, and we hear this a lot. We want to be in London first, and then we'll look at the other markets and whatnot. So there's this real push to be in London first. And again, there just isn't that much. So what we often try to do is to say, okay, fine. Well, let's define London as the wider commuter belt of London. If you can get into the city within, say, 30 minutes, or in the M25, for example, let's try to define it that way. So that's one thing. But on the international part, we have a consulting business that works internationally. We've done work in about 20 countries now. So we do quite a bit of work across Europe. Interestingly, we're doing more and more in the Middle East. So I'm here to tell you that the living sector is coming to the Middle East. I spoke at the Cityscape conference in Riyadh last November. And afterwards, I had a couple people come up to me and say, we're looking for consultants to help with projects in the Middle East. There you go, just for rental housing. In Europe in particular, Germany has a well-established rental market, which is a little bit different. The Nordics have, fairly well-established, but it's very regulated and a lot of rent control, a lot of government structure around that. The hotbed, I would say, right now is Spain.
I was going to say Spain. Yeah.
So almost all the big investors, private equity groups, whatnot, are in Spain, coming to Spain, trading in Spain. And it's across student housing, co-living. Actually, they call it flex living there. So it's a little bit of a different twist on it, and BTR as well. So Spain is definitely a hot place. We're doing some work with a client in Portugal right now, obviously a much smaller market, but it's starting to get some activity. And I would say Italy is probably coming next. So it's interesting that if you look even in the UK, it was student housing that was kind of the tip of the spear. So Greystar came over, that must have been 10, 12 years ago. They bought some student projects and then expanded from there, and a few others did as well. And we're seeing that in other international markets where student comes first, right, and kind of expands out a bit. And then either, depending on the market, either BTR co-living kind of comes after that. And my point around that is, if you go to Milan today, there are a number of purpose-built, brand new PBSA sites that are now opening, and literally a few, but you can see it's coming.
Actually, talking about Italy, what we've noticed is obviously after the non-dom changes here, we've lost a lot of very wealthy people.
Yeah.
And you know, some of the richest ones have gone to Italy.
Yes.
And the problem they're having there actually is finding large apartments.
Yeah, that's right.
So they're restricted on you know, whereas here we're now going to have all these massive apartments.
Yes.
That we were traditionally selling to the kind of non-dom type.
Yes.
They're having the problem where they can't actually find anything big enough to rent.
Yeah, yeah.
But
no, we're seeing that too. I mean, the outflow of wealthier people to Italy, to Spain, sometimes the Middle East as well. Yeah, we're seeing quite a bit of that. Just as a side note, one of the businesses I ran in the U.S., we had a big footprint in New York City. And one of the things, a strategy from probably 20 years ago now, is we were actually counterintuitive, but we were actually combining units to create these larger apartments because there weren't many options. And being able to charge, the conventional thinking is smaller apartments generate higher rent per square foot. And that is true. And that's why, from a BTR investor perspective, we really like one-bedroom units. We like studios. When we get a building that's been designed up as built for sale that has a lot of 2 bedrooms and 3 bedrooms, it's less viable as a BTR investment. But in that one particular case, way back when in New York, we were combining units and creating these kind of mega apartments because there just weren't that many out there. And it was for, it's a very limited clientele, but it was for a clientele who was very price insensitive, didn't really matter too much. Yeah. So I can see that happening in Italy as well.
In Italy. Yeah. And do you find that when you go to different places, it's kind of the same formula you're using, right?
Yeah. We get asked that a lot. So on the advisory side, like I said, 20 countries and counting, I think, 80-20 is always an easy benchmark to say. I think it's 80%, it's probably more than 80%, same. And then 10 or 20% is kind of local nuance, local, what people are accustomed to in terms of the design and how they live and how they use amenities at the buildings. It's more similar, more similar than it's different. But when we come in with a new client, this happens, it's a little funny because it happens so often. We'll sit down, and I told you we're doing more work in the Middle East right now. We've done a lot of work across Europe. We've done work in Australia, New Zealand, Latin America. We sit down with a new client, and almost every time they say, okay, well, you guys haven't worked in this market, and let us tell you what's going on here. Young people are waiting to buy, they're renting longer, and they're not sure if they're going to get married or have kids. They're waiting longer for that too. And they want to be global nomads, and they want to move around the world. And some people can't afford the down payment, but even those who can maybe want to wait a bit. And empty nesters are selling their big homes and moving into rental. And we just smile and nod and say, oh, yeah, really interesting. Yeah. It's the same story. It's everywhere. Very similar everywhere. People are people, and it's kind of the same dynamic. Yeah. But it's part of the process is for us to let them tell their story and let us react to that.
Yeah. And the thing is that having the two different sides of the business, which I want to dig into a bit here, you're kind of vertically integrated. So you're able to know, what to tweak and where to go. Can you talk to us a little bit about?
Sure. So we have
how that sort of came together. Really.
Yeah. So we have our investment and management business is called Compass Rock, which was a rebooting of the business I had originally set up in the U.S. Way back when, and that is just UK and Dublin, Ireland focused for now. And in that business, we invest, we asset manage, property manage, and property manage meaning down to the site level. So we have leasing people and maintenance people who are employees of Compass Rock who handle those buildings. So that's that business. The consulting business I keep mentioning is called Global Apartment Advisors, GAA. And that's the business I set up when I first left Brookfield and had never been a consultant before. I'd been a corporate guy always, but I saw this need for information. And so built a consulting business around that. They are two separate businesses, but there's definitely some linkage between the two. And it's really interesting. I think that the ability for us on the Compass Rock side to be actually operating buildings and understanding what works, what doesn't work, what technology, we can kind of help the consulting side with real data and real information. And equally on the consulting side, because they're doing work all over the world, they come back and say, oh, we just saw something really cool. We just saw a new amenity that we haven't seen anywhere. And so we can say, oh, well, maybe we'll test that out on our portfolio. So there's some synergies between the two.
Very interesting. I mean, listening to you, I'm already thinking of all the different things I want to talk to you about. But I guess collaboration is quite key in what you do, because when you go to new markets, you need to find that guy who really knows, how to navigate the planning process, or where to find the land first before other people, or things like that. So there is a lot of that kind of relationship that goes on. Yeah,
that's right.
So, services like the customer service that comes with being in a property, which is kind of the unseen but extremely important.
Yeah.
Before that would be how you actually design these spaces so that you maximize your investment and that you actually use the experience that you have from everything you've done all over the world to make sure that the end product is actually really competing well with the other operators in the area, and also maximizing how the space is used. So talk to me a little bit about how that works.
Yeah, so on the consulting side of our business, that's an area that we spend a lot of time on, which is we call design optimization, which is, and it's, we get involved, we like to get involved as early as possible, of course, because then we have, more opportunities to have some input and add value. But sometimes we get involved, after the planning is completed and the unit mix is completed, and it's just, the ground floor is an open canvas, and what would you do with it? But anywhere on that time scale, the types of things that we would do is look at the unit mix, if we have the opportunity to look at the unit mix, and that's based on market research. So, how many 1 bedrooms versus 2 bedrooms, and should you have studios or not, and what might that look like? And really granular. So we're not architects, but we work very closely with architects, oftentimes side by side, and even in unit designs. What if the bathroom were here and the living room were here? And I mean, that kind of detail. But when it comes to the amenity spaces and the common areas, giving input on where these spaces should be in the building, because there's a strategy around. Do you put the gym at the rooftop, or do you put it at ground floor, and why, and where do the other amenities sit? And equally, how large do they need to be? No one really, most in the market don't really know, and there's a bit of a science to it, just because we've done it so many times. But everything we do on the design side has basically the NOI and the value of the building in mind. And so what I mean by that is, if your parcel storage area, which is one area that gets a lot of attention these days, and it's only getting bigger and bigger, is placed in a way that makes sense, such that you don't have to have someone from your front office, your leasing person, go down the hall and around the corner to go get someone's parcel.
Good point.
You might be able to operate that building a little more efficiently.
Yeah.
Or when that person's getting the parcel, they're not abandoning their post at the front of the lobby. So it's things like that. And what's the leasing journey? What's the marketing tour? What does that look like? If you can design up a building where you're showcasing the amenities and the units and the show flat and whatnot in 30 minutes instead of 60 minutes, you might be able to staff that building that much more efficiently. So it's things like that go into it. So it's not just, should I have a gym or not, and how big should it be? There's a lot more strategy that goes behind it. So we do a lot of that type of design work.
And that knowledge comes from the management side.
From the management side. And the other thing that I find often is it's not static. It's changing all the time. Because we're doing so much work in different markets and internationally, it very often happens that someone has come up with something very, very clever. And I often say that 80% of the IP from our business goes from us to the client. But 20% probably comes the other way, because we're learning new things all the time.
Yeah.
And they'll come up with some very, very clever idea, and we say, oh, that's really nice. We might share that with a few other people we know.
So if you had to say there's one deal that really stuck with you, what would you say it was?
Well, in the U.S., it would have to be Stuyvesant Town, which I mentioned is the big New York City asset. Maybe
11,000 units.
11,000 units. Yeah. I mean, it's kind of it was a big part of my life for several years, and just the sheer scale of it all. And what was interesting is being able to manage. I mean, it's basically like a city within the city. So there's 25,000 residents who live at Stuyvesant Town in New York. Wow. We had our own private police force of 75 people.
Wow. So, okay.
And so it was really running a little town, basically, and there was a fair amount of commercial space as well. And it was, and for any of the viewers who've maybe been in New York City, now you're going to want to go down and check it out, which you should. It's near New York, NYU, New York University, in that area of town. But to run a big property like that, and to do all the things that we do on 200 or 300 units, but on 11,000 units, you still have to lease all those apartments and do all those unit turns and all those things, but just at massive scale. And in New York City, we had 3 different trade unions that we worked with. So it was just very politically complicated and a lot of history because it was a property that was built in the 1940s. So there were people who literally were born there and lived their whole lives there. So they felt like this is even though it's rental, this is my home. So you have to make sure you manage it appropriately. So that for me is the biggest. Here in the UK. I mean, it's a little bit of a parallel, but I'd have to say Wembley Park because they were one of our first clients when I left Brookfield, and I was working with them about 10 years ago. Even before I'd moved to the UK, they were a client, and we're working with them, and they were very much imagining, how they could bring some of that U.S. multifamily experience to here to the UK. So the things that we were doing way back then around amenities and design and how they were going to be staffed and how to raise the level of customer service, something we haven't really talked about. All of those things were in play at Wembley Park. And I think they've done a good job. One of the things that our consulting business does is mystery shopping the market. And so for clients, and they'll say, oh, can you mystery shop my buildings? And can you also mystery shop some of my competitors so I can benchmark against? And so we have mystery shopped Wembley Park on and off over the years, and they regularly come in with very, very good marks.
So that's the customer service aspect of it.
Yes,
which obviously with the living sector, lifestyle is a really big important. So that's kind of like the invisible that makes the big difference.
Yes.
So what would you advise there before I stop ranting on and taking your time and saying thank you and goodbye, but just let's finish up on that.
Well, yeah, I think it's an important point. So we as an industry you think about it, we spend so much time and effort and money bringing these projects through. So all of all buying the land and getting the planning and working with architects and finding the capital, and just years to bring a basic 200 or 300 unit property, to the market. And then it's down to operations. And I think that most in the sector who haven't had first-hand experience with operations just assume that this is something that we do. We'll hire someone to do that downstream. We'll figure that out. They're focused on, development and investment and all that bit. But it's the operations that can make a huge difference. And it's really, you have this nice shiny building, and then you bring in you do it yourselves, or bring in a company to do it, and they do an average job or a below average job, and it falls flat. And that can be the difference of an investment that actually works or doesn't work. I would say there's some very good operators out there, but there's still a fair amount of room for improvement in the UK. And the work we're doing across Europe, it's probably even more so. There's room for improvement. And that mystery shopping process is one of the ways that we just see firsthand. What is the customer journey? What is their real experience? How long did it take them to book that viewing? What was it like when they showed up at the property? Did the leasing person ever actually follow up with them afterwards? And more often than not, it's a pretty average experience, unfortunately.
Well, if we call it property management in our lingo here, then I would say it's, generally speaking, way below average.
Yeah.
Unfortunately.
I was being a little bit kind with my comments.
You were being very kind, because I actually was asked nearly 9 years ago now by a US operator to find a really big property management company for them to start working in London.
Yeah.
And I was like,
yeah,
there isn't one.
Yeah. It's a bit of the I think it's a bit of legacy UK property market. It's always been about the building and block management. The customer has generally been the individual private landlord. The customer wasn't really the tenant, right?
Yeah, that's what I mean, because you've got building managers which have completely different roles to apartment managers.
Yes.
And when it comes to the apartment managers, I think that most people feel, it's up to them. There isn't systems in place. If you had these sophisticated software systems in place where things were a bit more automated and they had a bit more support and they were actually trained, to handle things on a large scale, then maybe it wouldn't be all down to them, calling and chasing, and, it becomes a really thankless job. Right. And every time you pick up your phone, you're just being screamed at. Yeah. So I think this is where, we don't have the infrastructure.
This is the opportunity, though. This is the opportunity to provide quality housing with good service and just a good level of responsiveness and treating your tenants fairly and all these basic things. Just doing that, brings you above the market at this point. I mean, I remember back to when I was at Brookfield and coming over here from the States 10 years ago, and some of these early, they used to be called PRS forum meetings, which was only 20 or 30 people kind of in a room looking at each other, trying to figure out, what is this industry going to turn into, or is it going to be anything? And as one of the few Americans in the room, they would say, well, do you think, David, do you think this will work here in the UK, in London? Do you think this whole idea will work? And I remember thinking, well, you've got a lot of renters, got a lot of demand. You don't have enough units available. A lot of the stock is older or dated or not well maintained. A lot of the owners are private individuals and they're not professional property management people. So the customer experience is pretty mixed at best. Yeah, I think it'll work. When people have that experience of going into a BTR building and being treated well and signing a 12-month lease and knowing what they're getting and they have a maintenance issue and it gets fixed, I mean, there's a lot of comfort in that.
Yeah, no, absolutely. I mean, I went to see Bloom and they're like, you can short lease, long lease, bring your dog, wash your dog, when you go on holiday, rent it to someone else. And I was just like, what? And they had 850 units full.
Yeah. The early work that I did with at Wembley Park with Quintain and Lone Star, and again, I keep going 10 years back, sorry. But I remember sitting in the leasing office, I would sit in a corner and watch and listen 10 years ago. And customers, prospective residents, in the US we call them residents, not tenants, which is very intentional, because they're your resident. They live there. This is their home. Yeah. But they would come in and I'd hear the leasing person explain kind of what you just said. And the skepticism, because the UK market 10 years ago, and you'd hear these people say, no, wait, what? I don't pay for the gym and I can have a 12-month lease. And, I'm not going to be kicked out if someone wants their apartment back. This thing we call certainty of tenure, which BTR offers. Yeah. And over again, people would just be like, something's up here. You're not telling me the whole story. Yeah. No, it feels like a Band-Aid. I mean, I really am going to stop now. But it feels like a Band-Aid, because what happens here is when we have these issues, it's addressed with legislation. And then when it's addressed with legislation, like you can't chuck them out for 3 years. Then there's like, but what about all those people's personal circumstances? They might not be able to commit to the 3 years. Yeah, exactly. You can't just kind of put a legislation to solve a problem that actually needs to be addressed in a completely different way. Right. I'm going to say thank you and goodbye. We're going to probably come and follow you around in your operations and do a day in the life of. But it's been really interesting talking to you. Yeah. And thank you so much for your time. Thanks for having me.
So if anybody's interested in finding out more about how to invest in this market, do please get in touch with us and we'll make sure to connect you with the right people in your organization, depending on what the inquiry is. Thank you so much for being here.
Thank you.
Thanks for tuning in to our latest episode of the London Property Podcast. Head over to our website where you can browse our exclusive network of top experts driving the market. As a member, you'll have direct access to our experts and their networks. Our award-winning content will help you choose the right professionals for your needs and make informed decisions about your investments. Personal recommendations are a powerful tool in connecting with trusted professionals. Let us introduce you to the right people to help you achieve your real estate goals. Contact us now to learn more about becoming a member and gaining access to these valuable resources, or joining our directory of experts.